UPS and FedEx stocks just took a beating. UPS missed earnings, FedEx slashed guidance, and both are reeling from US-China trade tension. But which delivery giant is better positioned for a comeback? Let's dive into the numbers, strategies, and what it means for investors right now. UPS just reported second quarter revenue of $21.2 billion, slightly better than expected, but profits missed. EPS came in at $1.55 versus the $1.56 forecast. Margins are falling, especially in international business, down to 15.2% from nearly 19% a year ago. China to US volume dropped nearly 35%. That's UPS's most profitable international lane. New tariffs and the end of the de minimis rule are slamming demand. FedEx is hurting too. Management warned about a $170 million revenue hit this quarter, specifically from China-related business. The China-US route makes up around 2.5% of FedEx's revenue, but it's highly profitable. Both giants are feeling the pain, but FedEx may be slightly less exposed to the China e-commerce shock. However, it still pulled back full-year guidance, just like UPS. Let's talk strategy. FedEx is planning to spin off its freight business in 2026, a move analysts say could unlock long-term value. It's also rolling out a $1 billion cost-saving plan. UPS? They're aggressively cutting costs too. They've already closed 74 facilities and are pulling back from Amazon Logistics. They're aiming for $3.5 billion in savings. UPS still pays a rock-solid dividend, backed by over $4.5 billion in forecasted free cash flow. That gives investors some cushion. From a technical standpoint, FedEx is looking oversold. RSI is around 21. Major support sits near $216, with resistance between $233 and $254. A short-term bounce could be in play. UPS is trading near multi-year lows, down nearly 28% year-to-date. But it's also yielding a solid dividend above 4%, which may appeal to income-focused investors. Analysts are more bullish on FedEx, with 12 out of 14 rating it a buy, and price targets implying 25 to 30% upside. UPS? Sentiment is cautious, especially after 2 quarters without guidance. So who wins this battle? UPS is more stable, more efficient, and delivers a dependable dividend. But it's facing big macro pressure and investor hesitation. FedEx is riskier but may offer higher upside if its cost cuts and freight spin-offs succeed. Which stock are you betting on, FedEx or UPS? Drop your thoughts in the comments and don't forget to like and subscribe for more financial deep dives.